live. We are live. Okay. Mic check. Mic check. Hold on. I should have checked that beforehand. Mic check. Mic check. Let's do this. GWB. We're in the house. Got myself some orange juice today. Got orange juice for this one. What is going on, investors? GWB. Let me see, has that gone out? Because sometimes I send it out. Yep. Okay, so that's gone out to everyone. Right. What is going on, guys? If you're in the chat, let me know. Typically, as we always do, these start out slow, and then a lot of people watch the playback. So, but if we can have at least one, it'll help because it's going to be quite interactive. So we've got Sam. How you doing, my brother? Sam, appreciate you, my bro. Thank you for dropping by. The XP, of course, my homie, my OG, Day Dizzle, bruv. Day one. How you doing, my brother? Got Bav, always. Bav's another one. Love, Bav. Love, bro. I got HT. I appreciate you, my brother. Thank you for dropping by. Josh, man, like Josh. Okay, I'm at work. We'll have to catch up. Yeah, no problem, my bro. Thank you for dropping by, at least, showing some love. I appreciate you guys. And yeah, guys, I mean, how's your week been? It's been a great week for building again. I'm not sure how October will go. Obviously, if you watch my video, I was talking about the October effect. And the September effect was pretty much, in full effect. We saw quite, what the S&P was down like 4.5%. So not quite a corrections when it drops 10%, but a finished red. So we'll see how October goes. But judging by how today started, the first day of October, we might see the October effect. So get ready. But yeah, I figured I wanted to do a quick view of how I go through annual and quarterly reports. This is just an introduction into that process. So if you are advanced, just see this as a refresher. And if you are new to investing, which a lot of members are, then you might find this very useful. So as you can see, just slides, okay, because that's to be quite interactive as opposed to being loads of slides and it's death by PowerPoint. It's short, sweet, it's to the point. Okay, so I've kind of titled this presentation "Putting the Pieces Together." Okay, we've got a little puzzle in the background, so appreciate the artwork, the creative skills. So probably allow another minute or so for other members to join in, and then we're going to crack on. But yeah, guys, drop in the chat. How's your week been in the markets? Have you been shopping as well? It's always weird, like when I'm buying stuff, I always wonder whether Discord members are also buying or not. Usually when it goes up, that's when we find out who's been buying. So let me know in the chat. But yeah, about another 30 seconds, then we'll crack on. But yeah, guys, if you have any questions as well during the presentation, like I said, I want it to be very interactive. Just drop your questions in the comment section, and it'll be great to, if anything comes in your mind, or, if you have a question at the end as well, we can have a Q&A session at the end. But not ready enough. So it's about not ready enough. I know in certain positions, not ready enough. But yeah, I would say I'm looking at open. I've been very aggressive with open. I want to buy a lot more in open. But it held, it held $19.90. And obviously, if you've been in the channel, you've seen that institutions have been loading up. Vanguard especially has been loading the boat. So not ready enough. So we'll see how it goes. October effect. Remember, a lot of the crashes that we've seen in history all began in October. So I don't want to be a conspiracy theorist, but we never know. XP said slow, but I stopped day trading. But bro, I thought you were oh yeah, I mean, you saw that pattern with Bitcoin, right? And your hot 8 mining, so your mining stocks with Bitcoin, you saw a correlation there with price action. But of course, you mentioned you didn't want to short your positions, so it made sense. It makes sense. HT said he opened hymns. Oh wait, so HT, are you Yalencia? Is it Yalencia? Forgive me. So your Discord must be Yalencia then. So you've got the best average in the whole Discord. I saw the position, but I was preparing my presentation, so I didn't get a chance to really see the average. But at 727, you've got the best average in the Discord. So congrats there. I'm not jealous at all. I am not jealous. No, not at all. Hey, you got Chris in the building. Chris, welcome, my brother. Welcome, my brother. We got Sam. So Sam, yeah. So Sam's been nibbling on hymns. Hymns has just been a constant like downward trend. I posted the Fibonacci retracement. All support levels are getting decimated. I was trying to find news. There's nothing. It's just literally just going down at its own accord, and we're just taking advantage. But I think I strongly believe Q3. I listened to the earnings call again. Q3, we're going to dominate Q3. Our acquisitions of Honest Health and Apostrophe alone, they said added about 6 or 5 million to the top line already. So very excited for Q3. I think Q3 will really put hymns on the map, and we shan't see. So yeah, so Chris, you're on time tonight, bro. Thank you. Not showing up at the end. Classic Chris. Like, hey guys, what's going on? 5 minutes to go. Yeah, so XP, I know XP's been waiting for open to tank. It hasn't tanked, bro. Vanguard is keeping it up, bro. So got some open sub 20. Yep, add to winners. Yeah, add to winners. You know, you gotta water the roses and cut the weeds, you know. So yeah, HT. Yep. Yeah, exactly. It should be. I should be. I'm not. That's what I call an average. Yeah, that's brilliant average on hymns. All right, guys. So we've given enough time. We're going to jump straight into the presentation. Like I said, if you have any questions, just drop it in the comments, drop it in the chat, and we'll crack on. So, most people find annual reports or quarterly reports quite alarming, scary, but it really isn't. Okay, so this is the only part of the presentation. This is only part of the live. It's going to be a presentation. It's just this slide, and that's it. I want to just detail all of the key information that I look for when going through annual reports and quarterly reports, because you know when you open up a report, you got like 30, 40, 50. An annual report will be 100 pages long, and you're thinking to yourself like, yo, how do I get through that? All right, so this is the key information I look for. Very simple. I want to get, if it's a new company, I want to get a greater understanding of the company fundamentals. So what does the business actually do? What industry are they in? What's the market share? What's the growth opportunity? Where are they at? Who's the competition? I want to find all of that information, and I'm going to show you exactly where you need to go to in quarterly reports or annual reports to find that. Okay, so first step, especially if it's a new company, I want a greater understanding of the company fundamentals, right? Next, revenue streams. Okay, so now we understand what the company does. How does it generate revenue? Like, is it a SaaS business model? Is it like subscription software as a service? Are they getting reoccurring revenue? Is it revenue based on purely sales? So do they have to sell, their sales volume? Like GoPro, for example, is now combined both. Before they used to be hardware, they had to sell out all the cameras. But now they've transitioned into subscription service. So again, all of that information, you'll only be able to find that out in the annual reports or quarterly reports. So again, what type of revenue stream does the business have? Okay, you'll find that again in the reports. Then I want to see a summary of the financial performance. Okay, so usually companies, when it's earnings, they release like a press release, and it's just basic. Okay, so basic, year over year, this, quarter over quarter growth there, gross margins, etc. They just give you a summary, but in the annual report, as well as the summary, you get more detail and more commentary from management. So it gives you a bit more color as to how this growth was achieved. So I want to find that information. Also, recent developments. Okay, so that's quite important. Has there been any recent developments between quarters, or has there been recent developments between year over year? Okay, so have we made any acquisitions? Have there been any new product launches? How are these new product launches performing? how is acquisitions performing, like what's management expectations for the acquisitions. These are all of the information as investors in these companies we ought to know, and we ought to have on our radar. Okay, so again, a lot of this information you might get the management talk about it during the earnings release, the press release, but we want a lot more meat. Okay, we want a lot more meat on the bone, and you're going to get that from the reports. And last but not least, we want to understand the risks associated with the companies that we own, right? So remember, when we buy stocks, when we buy shares of a company, we are business owners. Do you get what I'm saying? We own this amount of shares of this company. So I'm a part business owner. So with that, you want to know the risks. Okay, so what am I exposing myself to? What are the risks associated with a business? And believe it or not, in annual reports, in quarterly reports, management list out the risks that they see, and they go into detail, and you're going to see that again. So again, you always want to be aware of your downside. As much as we all love to focus on the upside, the growth, this is where we're going, this is the revenue, blah, blah, blah. We also want to understand the risks. Okay, so what would happen if things don't go according to plan? And how would that affect our position, our market share, our opportunity? All of this information is what we need to know. Okay, so that's it. All right, this is the key information that I look for, and I hope that made sense. Okay, so that's PowerPoint's done. Okay, this is not death by PowerPoint. Like I said, just key information. I'm going to keep that there. So guys, let me know in the chat whether this makes sense. Okay, so before I go into the practical side, let me know whether you have any questions regarding the key information here. I'll give you a minute. I think if this is straightforward, then I will stop sharing the PowerPoint. I'll make this presentation available in the channel as well, in the chat. But yeah, I guess there's no questions at the moment. Hey, we got Plant. Jesse, my brother. Appreciate the love, bro. And congrats on your Discord as well, bro. The growth is there. We're seeing the growth. So, guys, it's a Plant stock. If you're a Tattooed Chef shareholder, you know who this guy is. Okay. All right. So HT asked, are quarterly and annual reports revealed before earnings or on the day? So it's on the day. So usually companies announce when they're going to report it, and they will announce whether it's going to be before market open or after market or market close, right? So usually once there's an announcement, so we're going to see now, HT, we're going into Q3. So a lot of companies will start announcing that, okay, Apple might announce they're going to release their Q3 earnings on the 30th of October at market close. Okay, so that will be in a press release, and once the market closes, usually a couple of minutes after market close, they'll release the what's the word? They'll release the press release. Sorry, yeah, they'll release the press release, and then they'll file the documents with the SEC, and they'll enable us to see. So yeah, so it's usually before market open or after market close on that day. Okay. And Bav said, yep, that makes sense. All right, cool. So we are good to go. Let me remove this and let me share. Let's get interactive. Okay, we'll stop that. Share this screen. Okay, where are we? All right, let's pull this up. Okay, so where to go to find annual reports? Okay, so the traditional way is you can go on the SEC's website. So that's the Security Exchange Commission. Now, this is where legally all publicly registered companies in the US have to submit their filings. So this is the traditional way. All right. So you go on Google, you type in, the SEC website, and you go on company filings. So you can click on that. Okay. Again, if you know all of this information, be patient, forgive me, but I'm being conscious that some people might not know that. Right. So go on the website, and then you type in the company's ticker symbol, so HIMS. So that's HIMS, since we all love HIMS. And then you click on that, and then straight away you see selected filings here, and you can look at the 8Ks, the 10Ks, or the 10Qs. So 10K is your annual reports, and your 10Q are your quarterly reports. Okay, so you click on that, and then there you go. You have a list of the most recent filings. So you have quarterly reports for quarter ending June. The same again, quarterly reports ending March 31st. So that's Q1. And then you have your annual reports. So that's your 10Ks for 20. And again, you can see the annual reports there. But this is the long way around. So essentially, you can, once you click this, this opens, right? This is your quarterly report. So it looks like, whoa, what's going on? But this is pretty much the front page. Okay. So this is the SEC. If you want to go through the SEC website, that's how you do it. I don't do it that way. All right. I don't do it that way. I like to go on a website called Doco. Okay. So DOCOH.com. Doco. All right. This is the homepage for Doco. Now, most of us already know about Doco, but again, this pretty much enables you to filter. You can save your favorite companies on the side, and whenever there's like a new filing, Doco sends out automatic notifications that the company has made, an 8K filing or a 10K filing or a 10Q. I absolutely love this website, and it's free. It's free. Okay, so you don't have to go through the hustle and bustle of going through the SEC website, look for the company. You've already got your favorite companies listed right here, and all you have to do is simply click on it. Loads up. You can see all their financial data, institutional ownerships, any recent news, filings, etc. Right. So again, sticking with hims and hers. So like I said again, guys, if you're not familiar with Doco, it's free. DOCOH. Definitely create an account with them and definitely get your favorites list created. I'm not sponsored by Doco. I'm sure they have no idea who I am, but it just makes your life so much easier. And again, like I said, you have the benefit of getting the notifications when the company makes a filing. All right, so we're on Doco. Go on hims and hers, okay? And then you want to click on filings, all right? So this is where you need to be. This is home right here. Filings. Click on filings. But then you're going to get overwhelmed with all of these recent filings by the company. You've got Form 4s, you've got 424 B3 forms, 8Q. Like, you have to scroll through, and then you're like, oh wait, there's the quarterly report. Long. Okay, we want to make the process as pain-free as possible. So all you got to do is click on filter, right? And then you select, you want to see the 10Ks and you want to see the 10Qs. Job done. That's it. And then you go down and updates, and then boom, you've got a list of all of the filings there. Okay. And the good thing as well about Doco is when you open up the filing, if you make any annotations, it saves it and stores it. Okay. So unlike the SEC website, with this, you can make annotations. You can, highlight here if you want. You can annotate it or highlight it, and it saves. So next time I can go off, I can go into GoPro, check theirs, go back to HIMS. If I want, go back to the filings, filter it again. Let's bring up the 10Q. It will be there. All right. So you can always go back, and it's great for referencing. Okay. So let's have a look. The highlight is there. All right. So it just helps with your study process. And if you're going through the quarterly reports and you want to break, you can come back to it. You're good. All right. So one of the reasons why I love Doco. Right. So now here we go. Okay. This is the front page. What I usually do as soon as I'm on the front page, I go to the table of contents. Okay. Because here you'll see a breakdown of the financials, the consolidated balance sheets, operations, etc. Where I love to go is management's discussion and analysis of financial conditions and results. Okay. This is where management talk about everything about the business. Okay. So if it's a company that I am researching for the first time, I go into their recent 10Ks or 10Qs, and then go to table of contents and management and discussion, right? So let's click on management and discussion and analysis. So people call it MDAs. I've mentioned it in the Discord before. Like, have you checked the company's MDAs? This is what they mean by MDAs: management's discussion and analysis. Okay. And right here, you see an overview. So this is a more in-depth discussion by management explaining to us shareholders what they do. Okay. Right. Let me go back into the chat. Am I making sense, guys? Right. Let me know in the chat. if I'm going too fast or if I'm going too slow. Does everyone get what the MDA is? Management discussion and analysis. I don't want to get ahead of myself. Right. Okay, so no questions so far, which is great. Okay, so I'm guessing you guys understand what I'm doing. So yeah, we're now in the MDA, right? Management discussion and analysis. Here they give us a great summary of what the company does. So Hims and Hers, formerly known as Oak Acquisition Corp. So remember, Hims and Hers used to be a SPAC, is a direct to consumer. Okay, so a B2C telehealth company incorporated in Delaware. And straight away, they go into the mission. I always want to know, what is the mission of the company that I'm looking to invest in? Okay. And usually you find that here. You won't find, typically you don't find this in the press release. You find out what the company does, where they're incorporated, and most importantly, what is the mission of this company. All right. So our mission is to make healthcare accessible, affordable, and convenient for everyone. Boom. That's it. Straight to the point, mission-driven company. And again, it's inclusive, okay? And it's not necessarily alienating anyone. They want to make healthcare accessible, affordable, and convenient for everyone, right? And again, they're a telehealth platform. They have proprietary websites, electronic medical records, record system, etc. You can find out a lot more information there. But straight away, by this point, if someone recommends a company to me, and I've looked at the 10Q, I've looked at the overview, and I've seen what they've done, and I don't understand it. So I don't understand the business fundamentals. Like there's a company called Apps, right? Let me bring up Apps. Apps is a company I've tried to get my head around, right? So Apps, let's go to filings. We'll filter up. Like, it confuses me. That business just confuses me. Like, I mean, the financials look great, but the fundamentals of the business is just, it's not within my circle of competence. And sometimes it's okay to just say, look, this is not for me. I don't get this, right? So if you have a look, so okay, so Digital Turbine Inc., through its subsidiaries, is a leading end-to-end solution for mobile technology companies to enable advertising and monetization solutions. Its digital media platform powers frictionless end-to-end application for brand discovery and advertising acquisitions, and it's crazy. I'm reading it now. I'm like, whoa, calm down. And again, with the company, what is their mission? You know, they haven't highlighted their mission. Like, where are we going with this business? Like, what's the purpose? What is the point of this business? Nothing's been highlighted. And, you know, in the end, as much as the stock was going up, I just had to say, look, it's not for me. And it's okay. All right. It's okay to, you know, look, this company's not for me. I just don't understand it. And yeah, so I'm not necessarily big in the digital advertising space. You know, I don't really know what it means to be what was it, an end-to-end application, you know, frictionless end-to-end application. I would have to go and Google that to find out what it means. Do you know what I mean? And it just became a bit of a headache, right? So, and again, I don't know what the company's mission is. Nothing has been highlighted here. So this is a company I looked into, but I stopped immediately after I looked at the business fundamentals. So that's the first point. Okay. Now, once we have an understanding of the business overview, we now want to find out revenue streams. Okay. And I'm going to use a different example because I've been using HIMS. A company that I was looking into recently is Logitech. Okay. So we've been having discussions about Logitech in the Corsair channel. And again, same process. As soon as it was brought to my attention, I went straight to the quarterly reports, filtered it on Doco straight there, and then let's pull it up. Okay, so I went straight down again, MDA, look for it. You click on it, redirects me there. Job done. All right. So now, overview of the company. So they've been around for 40 years. Okay. They create products to improve experiences around the personal computer, so the PC, platform, and today is a multi-brand, multi-category company designing products that enable people to pursue their passions and connect to the world. Okay, so that's their mission. I liked it, I understood it. Plus, I also knew what Logitech does anyways before this. But again, if you're new to the company, good summary of what the company does. Now, in terms of revenue streams, okay, you can look at it here. So management go into detail as to how they generate their money, how much, they have different segments for generating revenue. So they broke it down here. The first segment is their creativity and productivity. So that's new PCs being shipped, etc. They also make money from gaming. Okay, so they've got PC gaming and gaming platform devices. They also make money from video collaborations. They also make money from music. So they sell music products, so headphones, gaming headphones, blue, microphones as well. Again, this is part of their revenue streams. So, and they also have smart home devices. So your smarts, like Amazon's Alexa, Google, they have their own version. Okay. And the good thing as well is they go into a lot more detail with regards to, what they offer. So again, you've got the PC hybrid, PC gaming controls, a lot more detail, and you can also find out how this particular revenue segment is doing, right? So with Logi, I've already been through this, and it's going to be an example. So sales of our Harmony Universal Remote and Circle Security family of products declined, okay, substantially in fiscal year 2021. Okay, so in general, our sales of Harmony and Circle products are under pressure. See, these are things you don't want to see, right? But if you don't go into these reports, you wouldn't really know this. Okay, so straight away, you're seeing red flags in certain segments of their revenue streams. Okay, so Harmony and Circle products are under pressure as the way people consume content is changing. Okay, so this revenue stream is, as I'm reading this, I'm thinking to myself, this is almost becoming redundant here, right? The smart home market is broad, and we will continue to explore innovative experiences to drive growth in the smart home category. Again, something like this, I've read this, I'm thinking, why bother? It's like, yo, why, flog a dead horse, as they say? If it's dying, like, just perhaps get rid of that and focus on areas that is generating revenue. So if you look at the music side, you can see continued growth in the wireless headphone market is expected for the next several years as consumers increasingly adopt wireless headphones, okay, over wired headphones. So I'm like this, I'm like, management, why are you focusing on this revenue stream? It's clearly dying, right? Focus more of your attention and your investment in music. Focus more of your attention in gaming, where you said, so you can see, so this is a platform, so the esports gain greater popularity and gaming becomes more social. Again, these are good buzzwords. This is what I want to see. We expect gaming will increasingly become one of the largest participants and spectator sports in the world. This is so much better and drives more revenue in comparison to the smartphone. So again, this is information as shareholders or as potential shareholders that we need to know. And again, all this information you won't have this level of detail in just a basic press release that you get on Seeking Alpha or on all of these other financial platforms. This is homework, okay? This is DD, right? Am I making sense, guys? Am I making sense? Let me know in the chats if I'm making sense. But yeah, this is why we look at the MDA. This is why we're going to annual reports, because this is the thing. Like, if you don't do your homework, how would you know that this part of the business, the smart home business, is struggling, right? But yeah, okay. So, yep, no questions. So we'll crack on. Right. So that's how you find out revenue streams. Also, you can go to the financials and have a look if you scroll down. So look, this also puts into perspective. So they've broken down the products. So they have pointing devices, keyboard combos, PC webcams, tablets, gaming, video collaborations, mobile speakers. So again, you're getting so much more detail in the annual reports or the quarterly reports of the products and services versus, let's go on, Yahoo Finance, right? We go on Yahoo Finance. Let's quickly check up Logi. And the thing is, most investors won't do this. Do you know what I'm saying? A lot of investors, especially retail investors, are lazy, right? They'll just go to Yahoo Finance, check their financials, check the quarterly. Yeah, see the total. You just see pretty much a summarized version of the total revenue, cost of revenue, gross profit, and net income. Boom, bam, Bob's your uncle. I've done my DD. That's not DD. That's bare basic. Whereas we're going into the annual reports, we're getting a full breakdown of everything. And as you can see, right, look at the smart home. So now management already informed us that that's a weaker side of the revenue, but we can see even here. So from year over year, last year they generated 6.8 million, but this quarter only 6.1. So we're seeing a decline. And also look, most mobile speakers also saw a decline. Last year they reported 29. This year quarter 28. So again, another red flag. Well, not necessarily a red flag, but we are getting a lot more detail as to how the top line is actually performing. Let's check the chat. I want to make sure I'm not BB. Okay. DD. So not BV. Yeah. All right. So again, this is the extra step that we have to take, to get an advantage or get an edge over our competition, even though we're not really competing with anyone. We're just trying to grow our wealth here. But these are the small, minor details that we need to pay attention to gain a better understanding of how the business is performing, because management now said they're going to still focus on smart home. I'm thinking, surely, you know what I'm saying, it might be better to just invest in one that's growing the fastest. So even if you look at the changes, right, you can see the PC webcams or the gaming. Look at the gaming. The gaming saw the highest percent change, right? So gaming was 181 previous quarter last year. Look at this year, almost doubled, right? So it would make more sense to focus on gaming, because that's where you're seeing the biggest change. Whereas you're seeing a decline in this. So sometimes you might spread yourself too thin. But again, this is all information that we can add to our research process. And one of the reasons why I love going through annual and quarterly reports. Okay. Right. So now we have the revenue streams. Okay. Good understanding of the revenue streams. Summary of financial performance. Again, it's all within the quarterly reports. So you can scroll down after the revenue part. And then again, they break down, management go into detail as to how they're performing, right? So pointing devices, you had that here. Straight away from this, we can see sort of 52% increase. Fantastic. Management tells us why. So sales of pointing devices increased 52% in 3 months ended June 2020 compared to the same period of the fiscal prior, sort of the prior fiscal year. Now this is why, right? The increase was primarily driven by higher sales of our cordless, corded, and trackball mice as a result of remote working and learning trends. Okay, that's why we saw the growth. Again, we won't find this information on Yahoo Finance. So we know, okay, they saw this massive growth due to an increase of remote working, and learning trends. Now, as an investor or as a potential investor, I'm thinking, okay, now obviously everything's opening back up. People are going back to work. So will this part of the business, is there still more growth ahead of it? Or is there going to be a decline because less and less people are now doing remote working and people are going back into offices? So as a potential investor, I'm thinking this could potentially affect the top line going forward, and this is information, again, that gives us an edge. Okay. We're trying to anticipate how they will perform the next quarter and the next quarter after that. Again, this is what we need. So again, you've got information about the sales, keyboards and combos, which also saw a good improvement. And again, the increase was primarily driven by an increase in sales of our keyboard and mice, combos, as well as cordless and corded PC keyboards. More information. We're squeezing a bit more juice out of what we're doing. Again, PC webcams also saw a massive increase, increased 81%. Now, the reason why the increase was seen across the majority of the product subcategories, driven primarily by our sales of our HD Pro webcam. Okay, so more information, right? 1080p, 1080p Pro Stream webcam, Logitech Streamcam, and also the C50 HD webcam, partly due to organizations adopting remote and hybrid work environment. So again, you're reading this and you're thinking, man, Logitech were great benefactors of remote working. But again, the question now is, how much growth do they have left? Because people are going back to work. So yeah, let me check you guys in the chat to see how you guys are doing. Am I making sense, guys? Am I making sense in terms of, like, more detail that we get from management in the discussion and the summary of financial performance? Let me know in the chat. BB to the moon 2023. Hopefully, bro. And that's one of the reasons why I sold BlackBerry as well, is because, the fundamentals sounded great, but it wasn't reflecting in the financial performance at all. And the earnings calls, Chen sounded incredible. We had all of these partnerships with BlackBerry. We had 23 out of 25 top vehicle manufacturers were using BlackBerry software. I'm like, okay, that's fantastic, but there's no improvement in the financials. And then when we had that meme stock rally, sold out. But BlackBerry remains on my watch list. I'll continue to follow their products. I'll continue to follow the business. Any BlackBerry filings that comes in, I look at it because I know this company has potential. And if I do start to see the turnaround reflect in the financials, I'm getting back into BlackBerry. But for now, I took my profits and I'm just watching it. All right. So, okay, I hope you guys are gaining value as well. Now, let's go into recent developments. Right. Where are we? Let's look at HIMS. I think I had HIMS up for this one. Did I have HIMS up? Yeah. Let's bring up HIMS. So recent developments. Let's go to HIMS. Again, same process, guys. It's almost like, doing it in my sleep at this point. Do it all the time. Quarterly reports. Where are we? Right. So again, management, you see, it saves my previous highlights. Guys, sign up to this if you haven't already. Now, once you go into the management MD&A, right? I'm just going to call it MDA. You guys know what that is. You find information regarding recent developments right here. Okay. So you need to know this. Again, remember, we are opting to own part of this business. So we want to find out, has there been any significant developments? Has there been any acquisitions, new product launches? So they're letting us know here. Remember, we used to be a SPAC. So they're talking about the merger transaction. Gives us a lot of information here. There are also some earn out shares. There are some PIPE investments. Again, with SPACs, you find all of these investors investing in the PIPE, right? So that's what was the PIPE? Investors get all the information there. But usually in press releases, you find out who the PIPE investors are. And we found Palantir. They've been in PIPE investors for quite a number of SPACs now. But again, you get a breakdown of they're going to be receiving in terms of ownership of the business, etc. So that's to do with HIMS. Now, also, as well as HIMS, we know they had an acquisition. So they give us a lot more information here. So in June 2021, the company acquired all outstanding equity of Honest Health, an entity located in the United Kingdom that offers health and wellness products and services to further expand its operation in the United Kingdom. Okay. So they're going to give us a lot more information with regards to how that purchase was made. So the purchase for accounting purposes was 4.8 million. That's how much we paid. And that included cash paid up front and payable in the future. Okay. So we haven't completely just paid all of it. There's going to be payments going forward in the future. Again, information that we need to know about the acquisition. Common stock of $1.9 million and also a contingent consideration of $1.2 million. Now, if you guys know, I invested in him quite early, but when they made the announcement of this acquisition on his health, we just got the press release. We didn't get any information. We didn't get an 8K. And that was one of the reasons why I held off averaging down, because I wanted to know the details of the acquisition. This is what I was telling a lot of my Discord members. We don't know how much we paid for it. There was nothing detailed in the press release. We just knew we acquired it. For how much, are we going to be in debt because of it? What's how's it going to impact our top line? All this information wasn't given in the press release. But when we had Q2, when they filed the quarterly report, and I got this information, I thought fantastic. It sounded like a great deal, and I decided to load the boat, as you guys know. So again, another acquisition was detailed for us. Apostrophe. Oh, sorry, guys. Where are we? Yeah. So another acquisition was in July 2021. The company acquired all outstanding stock of Yoderm Inc. So that's apostrophe, an entity located in the United States that offers health and wellness products and services for potential total cash and stock consideration of up to approximately $200 million. Again, we've got information that the acquisition involved cash and also stock consideration. All right. And again, this is the company expanding. So Honest Health, the company, have a foothold in the United Kingdom. We're expanding across the US. This is what we want to see as potential owners or as existing business owners. Okay. So that details recent development. So again, you get all that information from the management as soon as you click on MDA. So management discussion and analysis. Okay. Right. So the last thing that I look at now is risks. Okay. Any questions, guys? Any questions before we jump into risks? So there you go. XP, thank you, brother. He broke down what the PIPE investor, the acronym, stood for. So private investment in public equity. Okay. And typically these guys come in during the process of agreeing a SPAC. Hey, one coin, one trader. You're fashionably late, brother. Fashionably late, but thank you nonetheless. Thank you for passing through, my brother. We've one coin, one trader. I'm going to put the presentation in the channel, but you can also go back and watch from the beginning if you miss anything, because we're on our final point now. So we're moving on to risks. Okay. Like I said at the beginning, we want to know the risks associated with the business. And typically all you have to do is scroll again, sticking M&A. You're going to have to you're going to have to scroll past all of the financials, and you will find it. Where are we? Okay, let's go to the content, table of content, right? Because it may look like I'm going too fast. Okay, so you can see under MD&A, you see qualitative quantitative disclosures about market risk. Okay, so simple, easy, click on it, boom, you're there. Okay, so management start talking about risk. You can scroll down and you see all of the risk factors involved in the business. Again, we own the company. We want to know what is the downside. Okay, so you get a summary of all of the risk factors that the management of HIMS sees with the business, but you want a bit more information. So this is a breakdown of the summary, but I want more. Okay, so one of the risks associated to HIMS and HERS business is, our limited operating history and evolving business makes it difficult to evaluate our current business and future prospects, and increases the risk of your investment. So they're letting us know that, look, we've not been around for too long. We're a new business. They began operations in 2017. There's risk there. Okay, it's not like an Apple that's been around for like decades. We're a new company, and we could get this wrong. So this is the risk you're taking as an investor or as a potential investor that you need to be made aware of. And again, this is information you don't get in press releases. You get annual reports and quarterly reports. Okay. Another risk they highlighted here. So we may not be successful in our women's health and wellness initiatives. Because remember, they recently launched HERS. So it's pretty much been predominantly HIMS, but it's been HIMS and HERS. But we've started to expand more in our HERS category. But they're also letting us know that, look, we may not be successful. All right. So it might fail. Our offerings, and they say here, our offerings originally catered towards men seeking treatment for conditions specifically affecting the male population, such as hair loss and erectile dysfunction. Okay. But they're letting us know that we began offering products and services for women in 2018. So still relatively new, about a year after the company was established. and this part of our business is still developing. So again, you need to be made aware of this risk. It's a huge risk. They could fail. They may not be successful. They're letting you know as a shareholder. And you've got a ton of risks that the management highlights to us as investors or potential investors. And it just goes on and on and on. It's always good to read, understand what you're getting involved in before you make the investing decision. It's very, very important. Okay. So another risk, if we are unable to expand our marketing infrastructure, we may fail to increase usage of our platform to meet our forecasts. Being honest, this is where you're going to find the nitty gritty. Okay. So I hope that made sense, guys. I hope that made sense. Where are we? Yeah, okay. So I hope that makes sense, guys, in terms of the risks, how you find out the risks. Again, remember, you need to understand the downside. As much as we love to focus on the upside, there is downside with every investment. And in order to know what that downside is, annual reports, quarterly reports. Okay. So hey, we got young investor, Zachariah, the king. How you doing, my young king? You all right? Thank you for dropping through, brother. Thank you for dropping through. And we got Mr. TNT. We got to change your Discord username or add it to it. Mr. TNT killed it on peak. Absolutely crushed it. But okay, guys, so that's what I look for. Okay, and then of course you can look more into details into the financials, the income statements, the balance sheets, the cash flow statements, and we've done video lessons for that already. Are there any questions? Over to you now. Let me know if you have any questions. But as you can see, annual reports, quarterly reports, it's nothing to be intimidated about. Just, now you know what to look for. It's so much easier. Open up the file, you see, 100 pages, whatever. Let me just go to straight MDA, and you know how to filter it, and then you just work your way from there. Okay, so you don't have to sit down and read from the table of contents and start from the beginning, like the legal framework and share outstanding and all that. It's all good information, but we want the meat. All right, we're going straight to the meat, and that's usually how you find it. So Sam, thank you, brother. Thank you, bro. Trying to give as much value as possible, share all the nuggets, and hopefully everyone can become. We're all learning, right? We're all learning. I'm still learning as myself, so hopefully this was valuable. Let me know, guys, if you have any questions. I think it was quite straightforward. Let me pull up the presentation again, just in case. Where are we? Right, so let's pull up. Yep. So just to summarize, so information that I look for, we've gone through how we gain an understanding of the company's fundamentals. Again, remember MDA, that's your business overview. In the business overview, you'll find out what the company's mission is. Very important. You'll find out what the company does. And look, again, if you don't understand what the business does, it makes no sense investing. Okay. Remember, we are investing in the company. Remember, Peter Lynch always says, there's a company behind every stock. Find out what that company does. This is the process. This is how you find out. And if you don't understand it, if it's not within your circle of competence, let it go. Let it go. Because the thing is, if you invest in a company that you don't understand what their mission is, you don't understand what they do, you don't understand their products, and the stock price tanks, how are you going to be confident to add to it? Because you don't really know whether it's going to work or not. So that's step one. Step two, revenue streams. Okay, so we use Logitech was a fantastic example where they broke down exactly where all the revenue streams are coming from, and from that we're able to find out which stream was performing and which streams weren't performing, which was the smart homes. Again, all that information. This is the extra work that you have to do to get that edge, to get that edge over other retail investors. Summary of financial performance. Again, the management also discussed that with us. Recent developments. Again, right underneath MD&A. You can find it there. Do the homework, guys. Do your DD. And lastly, risks. We've touched on the risks associated with the business. Managements are very clear about the risks. We saw with HIMS. They're letting us know, look, we're a new company. We started in 2017. We don't have much history behind us. That's a risk. We recently launched HERS. We were primarily focused on the men's side. We're now doing the women's side. That could fail. They could also mess up with marketing, letting us know this. Okay, so we're aware of the downside, and that summarizes what I look for. Okay, so if there are no questions, I hope you guys found this presentation very valuable. And this is probably one of the quickest ones we've done, about almost an hour in. But yeah, guys, if you have any questions, I'll open up the floor now. This will be a Q&A session, quick 5-minute Q&A. If you have any questions for me, it doesn't necessarily have to relate to the annual report or quarterly reports. If you have any questions in general, I would love to answer. Bav, thank you, my brother. I'm glad you found it valuable. Some new nuggets there. Hopefully help to streamline the process of your due diligence. But yeah. Okay, great lesson, bro. Thank you. Thank you, my brother. Esteban. Bro, my guy. Any questions, guys? If there's no questions, that means I think we did a good job. So what do you enjoy most about investing? I think for me right now, I think what I enjoy most is seeing others win. It's really bizarre. Like before I started the Discord, investing, I've always said this before, investing can be lonely, and you're growing your wealth and stuff and whatnot. Yeah, you're successful. And I really enjoyed, seeing my investments, especially last year, when the March dip happened. I was investing, and I'll see my money just 100% returns on these stocks because they tanked, and that gave me satisfaction. But what gave me even more enjoyment or satisfaction was seeing others win as well, especially early on in the year when we're making 100% returns for fun during penny stocks days, like seeing everyone in the wall of gains. Like that just gave me a different it gave a whole new meaning to investing, that we can all win together. Do you get what I'm saying? And I think that's why I enjoy the most. That's why I keep going on my YouTube channel, and that's why I keep sharing. So I keep doing all these video lessons. I want everyone to win, because yeah, winning by yourself is cool, but making money by yourself is cool. But when you can help others as well, yeah, that's why I enjoy most, for real. Okay, so what's Open all about? Okay, so Open Door, Chris, I'll send you my YouTube video. I've done a full video on it, or better yet, you can check my research notes in the channel. So got all of that there. But pretty much, I can tell you this: our mission at Open Door is to make buying and selling of houses as simple as a tap of a button. Yeah, I think I did. Yeah, I didn't butcher that. Yeah, to make it as easy as simply tapping of a button, something like that. Yeah, that's our mission. That was a quick test there. I saw that, Chris. I saw you, bro. First off, great work, homie. When are you going to? Okay, so DNMR. So XP, the company, I love the mission for the company. I love what they're trying to do. But what really puts me off DNMR is their valuations, bro. They're not making that much money. And then what you're asking for me to pay. So what's DNMR's let me put up here actually. Let's look at their market cap. I like what the company's doing, but with DNMR, it's like I just can't justify the valuations, bro. I really can't. I know you love the company. I know that's your baby, but with DNMR, it's right. Let's look at it. This is where I go wrong, right? So okay, so market caps. Remember, you got to remember, market cap is if you were to buy the whole business as one. Like if I had 1.6 billion, I'll be able to buy all of the shares outstanding and I'll own the company. So this company, you want me to pay $1.6 billion for this company, right? But if you look at their financials, like in the last quarter, they made 14 million. This is what I struggle with. Like to pay 1.6 billion for a company that created only 14 million in the last quarter. If you look at their annual report, if you look at their annual performance so far, their trailing 12 months is only 52 million. So XP, brother, I love you, bro. I love you, man, but it's just too expensive. Like I think when I look at investments, I look at it in real life. Like, would I pay 1.6 billion dollars for a company that only made me 52 million? Some people might answer yes, because obviously the future growth and their mission, what they're doing could be huge, but yeah, it's quite expensive. So bro, and don't hate me, man. Don't hate me. All right. So what's my opinion on upcoming earnings on Tattooed Chef and him? So Tattooed Chef. Whew, okay, so the reason why I kind of get hesitant with Tattooed Chef was because I had so much expectations for Q2. And as much as Q2 historically is our weakest quarter, I did have expectations, and I felt like my expectations weren't too high. So when they came in at 50 million, which was less than Q1, it was disappointing. So, but there were also wins from, I put in the Discord chat that I think we're underestimating the foods of New Mexico, which generated quite a lot of money in a short space of time. So I'm really banking on foods of New Mexico to, be our dark horse in Q3. And hopefully, I mean, we have all of these retail distribution, all these partners, that's got to count for something, right? And the thing is, Q3, if the sales are not strong enough, it only means one thing. It means people are not buying our products. And that's a huge red flag, because we've got there, it's there, it's in Target, it's in Kroger's, it's in Sam's Clubs, it's everywhere. It's there. We've got that reach, but if it's not reflecting on the top line, it means people are not buying. That's pretty much what it means. And then that will be a huge red flag. So I think for me, Q3 will be a very determining factor with Tattooed Chef. And sometimes you don't want to fall in love with a company, but it's very hard when you invest so many hours of research, following the company, following them on socials, keeping up to date with all of the latest news, and to then just cut it off because maybe they're not performing. It's tough, but at the same time, if we're not selling, we're not selling. Do you know what I mean? So, regards to hymns, love hymns, absolutely love hymns. In terms of Q3, if you listen to our Q2 earnings calls, Spencer, Lee, and Andrew gave us incredible hints that we're going to crush Q3. Our acquisition of Apostrophe and Honest Health, I believe they said will add 6 million already to the top line, and they increased guidance. So we're expecting between 60. I think my expectation for him is 65 million, which is ton of growth. So I'm very confident about hymns going into Q3. Not so confident about Tattooed Chef, but we shall see. And that's just me being real with you guys. You guys know I love Tattooed Chef, but I've got to be real. So Chris is still trying to understand open. Bro, I help you out, Great answer, top man. And a more random question is, how is your lighting so good? Okay. So Sam, I used to have a wedding photography business. So as I'll show you my wedding photography business. Actually, it's still up. I'll show you my wedding. I need someone to call the UK. So I used to do wedding photography. So as you can see, your boy is pretty good with lighting. These are the pictures I took of these couples. So I have a very good idea. Look at the lighting, the flash behind the couple there. So again, lighting there. So in terms of how is my lighting so good, I know a thing or two about lighting. I know a thing or two about lighting, and that's due to my photography skills. But I have a 2-light setup, a ring light, and then I do have a small video light for the background. So yeah. All right, let's get back to stocks. Right. Okay. All right. Okay. So yeah, I'll send you the video, bro. I'll send you the video. So open it. Okay. Never any hate. Yeah. Okay. So what is my fair value? So, brother, I would love to see. Okay, I don't want to say that because obviously I want to be considerate of you guys that already invested. But if we start to see DNMR drop below 1 billion, then it would get very, very interesting. Then I think the risk reward is there, because they could fail, in their ambition, obviously to eliminate plastics and whatnot with their science and stuff. I think it's incredible, but I want to reduce the risk. So if it does drop below 1 billion, then I would bump it up in my watch list. But yeah, for now, over 1 billion, I think it's too expensive. I would much rather buy hymns for 1.5 billion. So HIMS is 1.5 billion, and then you got DNMR 1.6 billion. HIMS makes so much more money than DNMR and is also going to continue to ton more money. Business expense. I'd just rather buy more HIMS at those valuations. Yeah. It's all love, my brother. It's all love, XP. I'm gonna need a wedding photographer. Yeah, you are, bro. Congrats, my. Hey, shout me. I'll give you some. I'll give you mates rates. I'll give you GWB discounts on your wedding, bro. If you need a wedding photographer, I'll give you some discounts. That's yeah. AT. Always honest with it, man. Got to be honest. We've got to be honest with ourselves and with everyone else, right? You know. And reality is, if we're not selling, we're not selling. So, in your opinion, how low can HIMS drop? So, one coin, one trader. That's a tough question, because when there's fear and panic, I mean, it can go anything, bro. It can drop below 1 billion. Right now, what's the market cap? Let me pull up the market cap for HIMS. Where are we? When investors are afraid for whatever reason, that's where you get incredible discounts. So HIMS, it could drop below $1 billion. So look at it. So on close, it's now worth 1.48 billion. That's crazy. That's why I had to come out of retirement and buy some more today, because not only did I reduce my average at 1.4 billion for this company that is growing at triple digit rates, quarter over quarter, year over year. And the plan Andrew's laid out with the recent acquisitions at 1.48, it's just an absolute steal, in my opinion, which is why I even bought more. Even though I'd finished my position, the fact that it kept on going lower, I had to buy more. So one coin, one trader, this can easily go below 1 billion. Anything is possible in this market. I've been in the game now to know that valuations can get ridiculously cheap. But typically, when the company performs, like I think Q3 and Q4 will really put HIMS on the radar for Wall Street. And like we open door, right? Open door is now on the radar of Wall Street, and we saw it absolutely tear. Okay, absolutely tear. This thing, where did it go? So let's look at open door. So open door one was at 34, right, back in February, and it dropped all the way down to $14. Are you kidding me? This company is expected to make $6 billion next year, and it was worth like 10 billion a couple of weeks ago. Like, that's ridiculous valuations, but it happens, and obviously we took advantage. We started buying open door, and it's been on an insane run since then. So that's the thing. That's one thing that happens with these companies. When they get so undervalued, when Wall Street starts buying, like when Vanguard started buying open door, the price starts running. And you want to be in the game long enough to benefit from that. But when will they start buying? Nobody knows. But I really believe on good performance, on HIMS breaking, analyst expectations, that will put us on the attention of Wall Street. And that comes with the book One Up on Wall Street. One Up on Wall Street talks about it. Companies can go under the radar of Wall Street for years. And, look at Tesla. Tesla was under the radar for Wall Street for years. And all of a sudden in 2020, boom, Tesla took off, right? But think about the amount of investors that got into Tesla back in 2013. Let me pull up Tesla. Let's pull up Tesla, all right? Let's look at Tesla. So Tesla was a dead dog for years. Look at that. So from 2016, right? Look at it. 2016, it ranged, right? For 3 years, even though the company was doing well, for 3 years, it pretty much consolidated. So it went sideways for 3 damn years. Oh, that would annoy me. So you can imagine, like, HIMS could potentially just fly under the radar for that long or even go lower. And then as soon as Wall Street got wind or started to see, Tesla is actually killing it, it went from what? $60, and within the space of 2 years, it went from $60 to $775 now. So that's how quickly circumstances can change in companies that are under the radar of Wall Street. And as soon as Wall Street likes the company, boom, they start loading and that's where we see the growth. So, and you can imagine the amount of shareholders that sold out of Tesla during that 3-year long consolidation, and missed out on this upward move. So you have to bear that in mind. All right. And it boils down to the image that I shared in the Discord, right? I shared this. Let me show you this. If you remember, let me pull this up. Stop, share my screen. In the Discord, I shared this in the announcement page. Where are we? Where's the Discord? 1 second. Yeah. So can you guys see the Discord? Yeah. Do you remember this picture? Doesn't that look like the Tesla chart? That looks like Tesla. That literally looks like Tesla. 3 years of consolidation. You're like, oh, this is pointless. You sell, and then boom. And then you think, oh, the market's against you, right? Yeah. So yeah. So there you go. I'm in for 4 to 5 years. Boom. Have that mindset. Remember, we're long-term investors, but I think people think long-term is like a couple of months. Long-term is long-term, like years. And the thing is, you got to ask yourself. So one coin, one trader. If you're in HIMS for 1 to 4, so if you're in HIMS for 4 to 5 years, do you think the company can execute within that time period? Are you confident that they will? Do they have the management that will? And if your answer is yes, then you've got your answer. So, all right, guys. So yeah, I think that's gonna wrap up today's live video lesson. I appreciate every single one of you. Thank you for coming, attending, and I'm not just talking to a camera. I'm talking to you. You guys are incredible. You guys make it worth it. And yeah, let's all win, man. I want to see all of us win, grow our wealth, because that brings a lot more satisfaction than anything. So appreciate all you guys. So I'm in for XP is in for $4 to $5. So when HIMS crashes to $4 to $5, that's when you're in. Bro, I'll have to buy at those valuations. I'll have to buy. Yeah. All right, guys. So yeah, have a great night. Have a great weekend. Rest up, and we'll be back in this. So Charlie, I'm not answering that question, bro. Is Ride a great company? No comments. Okay, no comment whatsoever. Esther, thank you, my brother. You two have a great weekend, King. Have a great weekend. And yeah, I'll catch you guys in the chat. Take care, guys. Peace.